purchase program. They will reinvest maturing debt for an extended period after QE as well. Matt Miller, looking at this situation, as you go into that news conference, as you will, it will begin in about 40 minutes' time. What's your first question for President Draghi if you get it?
My first question for him is what he expects as far as euro movement. What I think is so amazing is how in line this decision, at least so far, is with consensus, and also how stuck in a range these asset classes are. Euro 117, 118, it's been there forever. The Bund at 44, 45, I feel like I've never seen a different handle on the Bund. So the question is, will he say anything in the meeting, in the statement, that's actually going to really move these markets out of this super tight range?
Jordan, anyone that's talking or thinking about rate hikes at the ECB, how premature are those thoughts?
Pretty premature. We've got another year to go, really. I mean, towards the end of next year, that's when we should be thinking about that. So maybe next summer, that'll be the discussion that everyone will be having, but we've still got a long way to go. I think that's quite premature.
Given the data so far, Jordan, is there a risk that actually they shouldn't have moved from 60 to 30? And I go back to a question I asked earlier. How much of this really was about the technical constraints of the programme and not so much anything to do with the economic data, even though it has been positive?
Well, the data, John, like you said, has been positive. So I'd rather a central bank that's moving towards normalization of ultra-loose monetary policy rather than the other way around. So in terms of direction, this is the one to do. And is it very quickly? No, it's actually quite slow. So on balance, they're doing a pretty good job of getting us back to where we should be in terms of a normalization of policy whilst trying to sustain inflation as it is. And data is on their side. Growth's looking good, investment's picking up. I don't know why I'd be worried about deflation risk at this stage. So for the ECB, we're in a good place where global growth's picking up.
Jordan, here's something that's not on the Euro Bulls side. I want to bring up a chart, and hopefully you can see it on the screen in front of you. It's going to be the Treasury Bund two-year spread versus Euro dollar. That two-year spread right now is north of 230 basis points. And once again, Bunds catch a bid. Euro dollar has managed to grind higher through to 118. And I'm wondering how Euro dollar can be down here, or up here rather, with a spread that wide.
Well, we've done a lot of work on this. It's more than just the 2-year. It's also what's happening at the long end. So when the QE is being slowed, as we're seeing today, you're actually seeing the long end spreads widening up. So that was the initial support for euro. And then after the French elections, huge, and I mean huge, equity inflows into Europe. That was sustaining euro strength as well. So there is this detachment from rates, like your chart was just showing. There's more than just fixed income. There's the equity market and the FDI market. And with the political stuff in Europe, apart from Catalonia, calming down as a whole, and the French election was a big fear for a lot of global investors, that really has been the support for euro. And that's why you've had this detachment from where rates should be. In terms of where they go from now, tax reform and tailors that risk. But the euro rate should keep steadily heading higher. So that's the long-term story.
Well, Jordan, I guess what I think about is 2017, sure, was a positive story, and the politics has really been defined by what happened in France. But to what extent will 2018 be defined by Italy in a very different way?
John, you know me, I love to look at these sort of out-consensus tail risks, like the UK election, for example. When it comes to the Italian election, if they get through this reform on how the election's actually held, so away from pure proportional representation, a bit of first past the post, a bit of proportional, that makes it harder for the tail risk of 5-star having a majority, even harder than what it is already. But we'll have to keep an eye on the polls, John. The polls currently say it's neck on neck between 5-star and everybody else. If that was to move in their favour, it's a different ball game. We're not there yet, and it's something to keep an eye on, but it's hard for anyone who's trading euro to be consistently using that as a reason not to be long.
Hey, Matt, you want to jump in?
Yeah, well, you know, you brought up Italy, and I think one of the more interesting questions, even than the election, is what does the SSM, the single supervisory mechanism, do about the current stock of non-performing loans? That's like 350 billion euros. They've already made a rule for future non-performing loans, but Italy is sitting on a ticking time bomb of non-performing loans. And if the SSM makes a rule that's too painful, it could really crush their banks and really draw the economy to a halt.
Hey, Pierre, let me turn to you on that. The kind of issues that Matt brings up, sure, the data might have improved, but the fundamentals in a place like Italy, with the number of NPLs on the books of some of these banks, has improved on the margin, but it's still a big issue, isn't it?
It is a very big issue, perhaps not necessarily for the tier 1 lenders, but I think the stock of loans is large enough of non-performing loans that you have to work down that stock slowly, and it has to be gradual. You need to modify those loans, you need to agree new terms so that the market has a chance to absorb them, and so that also the pricing effect of those loans is not disproportional to the effect that actually the economy can handle.
Hey, gents, great to catch up with you as we break down that decision. Bloomberg's Matt Miller, Pierre Bosa, Credit Suisse, and from Jordan Rochester of Nomura in London. Thank you very much. If you've just tuned in, rates unchanged at the ECB. It remains at 0 for the refi rate, the marginal lending facility at 25 basis points, the depot rate at -40. It was all about the asset purchase programme. It remains at 60 billion euros going through to the end of the year. After that, it drops to 30 billion euros a month and runs for 9 months. Coming up next, we'll continue the conversation. Alessio De Longis, Oppenheimer Fund's portfolio manager, will be joining us. In the markets, here's the state of play for you. 94 minutes away from the opening bell in New York. Futures still positive here in the United States. Equities firmer in Europe as well. The story, though, is bunds catch a bid and treasuries do too. Switch up the board. Yields come lower globally by about 2 basis points on treasuries to 242, and a euro gaps south as well. 117.60 is how we trade on the single currency. From New York, for our audience worldwide, this is Bloomberg TV.